We're live. Here we are.
Hi. Hi, everyone. Hello, if you're joining us for this financial modelling seminar. The people that know me, I usually present this, I run a monthly discussion group for CPA. I have face-to-face, I normally have attendees of around 40. This is all new to me, this whole Zoom meeting, but I'm getting used to it. I hope you're all looking after yourself. You're coping well, not going stir crazy. So we're two minds about how we present these monthly meetings. So I'm really glad that I've been able to do this for you, because I think it's still valuable that we keep learning new things as we go along, and we're sort of housebound. We've got a very good presentation for you today. One that our discussion group certainly hasn't had before, this particular topic on financial modelling. And it struck me that as accountants, as CPAs, the fact that we've never talked about financial modelling, it just struck me that it's something, it's well overdue. So I hope you enjoy it. My name is Keegan Cashin, for those of you who haven't seen me before or met me before. I live in Sydney, and Sydney, Australia, and I won't talk too much longer. I'll hand you over to Danielle. And at the bottom of your screen, you've got the opportunity to submit questions, any chats or whatever, and we'll keep an eye on that and try to answer all your questions that we possibly can. So without any further delays, I'll hand you over to Danielle. Thank you.
Thank you, Keegan. Can everybody hear me okay? I just wanted to just explain a couple of things, first of all, about how we're going to run this. So we've got Keegan is going to stay in the background. You might hear from him throughout the course of today. We've also got Susan Wilkin in the background as well, who's going to help us with some of the technical things. I can see that we've got people from all over. I mean, this is a Sydney-based discussion group. So Keegan and I both based in Sydney, but I think we've got people joining us from all over the place. There's a couple of ways that you can interact with us. So if you'd like to, you can put in some, I can see people are putting some things in the chat. I'm going to run a couple of polls as well, so just to get a bit of feedback from you to see what you think. At the end of the session, a feedback form will come up as well, so just and that will let us know what you thought about today. The other thing you can do is use a Q&A. So either at the top or at the bottom of your screen, you'll see a Q&A, so you can actually ask questions that way as well. So we are also streaming live on YouTube at the same time, so that will serve as the recording also. So Keegan and Susan, if you just jump in, like if there's any questions or anything as we go. So this is me. I'm a Sydney-based financial modeller. I'm a specialist in financial modelling. In fact, financial modelling is pretty much all I've ever done. I've written a couple of books about financial modelling. I've got them right here. The latest one is using Excel for business and financial modelling, which is published by Wiley Finance. But there's also financial modelling for dummies, and I've got a couple of examples. I've got some files that I'm going to go through in Excel just to teach or to go through a couple of the points of best practice in terms of financial modelling, just to demonstrate. So so Keegan, I think we can send out the files afterwards. Is that right? So if you're happy for us to do that, we'll send out a copy of the presentation.
Yeah.
So
I'll send it with the link and everything.
Great.
So if you missed something here, you can catch up later on, and
exactly.
Good way to do it.
Yeah, it's nice to be able to sort of try it out for yourself. Okay. So I also run with CPA, I run a discussion group also on financial modelling. So yeah, financial modelling is my world. It's what I live and breathe. It's pretty much all I've ever done. So I'm just going to go through three really simple things with you today and go into a bit more detail on each of them. I think we're scheduled to take an hour, so I'm going to try to stick to an hour so that you can just take your lunch break. We'll talk about what is financial modelling, who builds financial modelling, and and how do you learn it? Like, how do you improve your financial modelling skills? So we're assuming here that everybody is working in finance. as an accountant generally. So this is kind of aimed at accountants in working in non-profit. But financial modelling is just such a skill that's relevant for so many different people. So I wanted to first of all just think about or to get an idea of what financial modelling is, and I'm going to launch a poll. And so you should, if you're joining us live, you should see a poll just pop up on your screen. And I want to know what you guys think financial modelling is, you know, whether you think it's just a complex spreadsheet, you know, does it need to be a P&L, cash flow and a balance sheet? Has it got something to do with fashion? No, catwalks, yeah. It's funny, we often get people getting a little bit confused, thinking this has got to do with fashion. No, it's not. And I think just about everybody's mostly saying that it is a tool showing possible solutions to financial problems. I think that's probably a good answer. Yeah, I mean, great. I think most people have had a chance to look at the poll. So I'm going to share the results with you. So if you're on the live webinar, you'll be able to see that most people think that financial modelling is a tool showing possible solutions to financial problems, which I'd probably agree with. So what financial modelling is, I mean, you could just say it's a complex spreadsheet. I mean, you know, not every spreadsheet is a financial model. Does it need to contain a P&L, a cash flow and a balance sheet? Most financial models do, but often they don't. You know, you could build a financial model just for the purpose of budgeting or something like that. Or it might just be cash flow. You may not necessarily need to build a full set of financial statements for a financial model. But generally, I find, you know, that the definition of a financial model really should be a tool. Most of the time it's built in Excel, it's nearly always built in Excel, that it displays possible solutions to real world financial problems. So you've generally got a problem that you want to solve, like I'm launching a new product, how much money am I going to make? Or I have to, my business has suddenly experienced a downturn and I need to lay off some staff. But what about you know, if I were to get some government assistance or some grants, how is that going to help? That sort of thing. In the non-profit sector, a lot of the time we do a lot of break-even analysis with financial models for non-profit. So generally you want to know how much income you need to generate in order to cover your costs, and that's usually the problem that you're trying to solve. So really a spreadsheet could be just about anything. I mean, a spreadsheet could just be a list of telephone numbers. That's not a financial model. But basically, a financial model needs to be more structured. So a financial model will generally have your assumptions, your inputs, your calculations, your scenarios. It'll be quite well structured, and you'll be able to see what's an input and what's an output. I'll talk in a minute about best practice. You know, what some points of best practice are in terms of financial modelling. But generally, you know, it really needs to be the assumptions and inputs and outputs and links are really important for financial models. It should also be dynamic. It's generally a standalone report. It does use relationships between variables. So, I mean, really, the whole point of a financial model is that in order to answer that question, you'd say, well, what would happen if I changed this? And you can run sensitivities on it. You know, that's really the real purpose of a financial model. It almost always looks into the future. So generally you'd say, okay, here's our current situation, and you want to predict what's going to happen in the future. So generally it shows some kind of a forecast, and most of the time it contains hypothetical outcomes. So really the point of a financial model is to be able to say, you know, what would happen if we did this, or what would happen if we did that. I mean, that's really the purpose of a financial model, basically. So I just wanted to show an example, but before we do that, I might just take a break and just check in to see if anybody's got any questions. Can see we've got a couple of questions on the chat. I just wanted to mention, if you are using the webinar chat on Zoom, if you could make sure that you change in the to box, you'll notice a little drop down. If you could change it to all panelists and attendees so that everybody can see your chat. Have we got any questions on the Q&A? No, I don't think we do. Okay, I think everybody's
Not
okay.
just yet, Danielle.
Okay, great. So we're okay to move on? Great. So I've got an example here. This actually comes from the Dummies book. So this is one of the files. You can either download it at that URL, or I will make this file available for you. So there's a problem. You're trying to make a decision about what to do, and it sort of shows the solution of either, if you do nothing, what is our business going to look like, or if we make some changes. So we're basically looking at two different scenarios. So I'm going to just flick over to Excel for a second. You should be able to see my Excel now. And this is an example of a completed model. And if we do nothing, I'll just go to the do nothing tab. And you can see this has all been set up with inputs. And you've got calculations based on those inputs. So you've got, it's a bus route, and we're looking at putting on, we think we're losing customers. If we do nothing, we think that our passenger numbers are going to decrease. Whereas if we were to make some changes, if I go over to the do something, you can see there that if I change my pricing or maybe put on a new bus route, we'll see how that might change. And so the comparison you can see. So that's an example perhaps of a financial model that can help you to make decisions. So you look at the two as a comparison. So just a very simple example of perhaps what you could do in Excel with a financial model. So that's something that you might consider doing. So I'd like to talk next about who builds financial models. So, you know, we've talked about what financial modeling is, and I'd like to think about now who actually needs to build financial models. Most of you guys are accountants and you're working in non-profit. I would venture to say you're probably doing quite a bit of financial modeling already, but I'd like to, I'm just going to share another poll at the moment. I'd just like to know who actually does financial models or builds financial models or uses financial models in the course of your work. So I'd like to just get a bit of an idea of who's actually doing financial modeling already. So I assume that you're working as an accountant in the nonprofit sector, and as part of your work, I would imagine that you probably need to build financial models sometimes. So it looks like, yeah, that's great. So it looks like about half of you are using or building or, you know, got something to do with financial modeling every now and then. So most, yeah, just, yeah, numbers are changing, but a couple people don't use financial modeling at all, or not yet, and the rest of you use them a fair bit. Fantastic. Okay, that's great. So I'm just going to end the polling and share the results. Interesting. I just wanted to get a bit of an idea of what you guys do with financial models. So who builds financial models? Basically anyone in finance. So really just anybody who's working in finance. Most accountants would probably use financial models a fair bit. Usually if you're trying to make decisions about the future, if you're trying to solve problems, if you want to do even reporting, if you're doing management reporting, a lot of the time that is the management reports that you're building are financial models. So a lot of people need to build financial models, and it's such an amazing skill to have. You know, it's a really good thing to put on your resume. I think a few people might be looking for work, and if you are, being able to put financial modeling on your CV is a great thing to do. If you are using LinkedIn, you can, I think it's a great thing to do is to go into LinkedIn and have a look at all your skills and actually put your skills there, because if a recruiter is looking at your profile, they'll have a look at your skills, and if you have endorsements from other people as well. So even if you are not looking for work, I think looking at building up your LinkedIn profile is not a bad idea, and just a bit of an audit of your skills and whether you think you can put financial modelling as a skill on your CV. I think it is, if you're able to put it on your CV, it's a lot of jobs at the moment, I think, have got financial modelling as one of the skills. There's very few roles, I think, out there that are purely financial modelling. I mean, I have the joy and the pleasure and the wonderful opportunity to do financial modelling all day, every day. It's like all I do is build financial models, which I absolutely love. But most people will probably, not that many people would do it just only financial modelling. It's probably part of your job. It's probably something that you might just do like once a week or once a month, or just as part of your work. So if you do put financial modelling on your resume, make sure that you don't exaggerate. Don't just pop it in there because you think it sounds good. Make sure you know what it is and that you definitely can give some examples. So when you get into an interview, you want to be able to give some practical examples. And always take every opportunity that you can do to apply those financial modelling skills, so that when you get into an interview, you want to be able to talk about the financial modelling that you've done as part of your work. I mean, I'm a financial modelling trainer, so I'm a consultant as well. I do a lot of training courses. Well, I used to before the shutdown. I used to run a lot of live training sessions. Not anymore. We're doing everything online at the moment. But as a trainer, I would say, oh, you've got to go on you would expect me to say you should go on a financial modelling course, which definitely you should think about doing. But what the interviewers, or what people are looking for when they're when they're wanting to hire someone with financial modelling skills, they probably don't care whether you've done however many financial modelling training courses. They want to know that you can actually build a financial model in the real world. So take every opportunity that you can to apply your financial modelling skills. So yeah, so that brings me to how to learn financial modelling. I'll just check in and see if there's any questions. Got anything in the Q&A? I think we're all good. Everybody okay to move on? If anything's not clear, feel free to hop in, Keegan or Susan, or if there's any questions. And I will I'll move on. So the best way to learn financial modelling, I mean, yeah, you can certainly go on a training course. There's lots of online content out there that you can use to learn financial modelling. I'm going to take you through a couple of the best practice points that I think you need to know about financial modelling. So if you want to improve your financial modelling skills, here are a couple of ways to go about that. One of the things I wanted to mention, actually, if you do if you have time at the moment and you want to pursue a career as a financial modeler, you should think about becoming a certified financial modeler. That is it's a tough certification. You become and the level one is advanced financial modeler, and you need to build a full set of financial statements. It's a live in-person exam. The next one's coming up on the 24th of October, and you need to actually build a full set of P&L cash flow balance sheet as a financial model. So that's something you could consider doing. And even if you don't, or even if you're thinking about doing that exam in the future, you can actually download a whole lot of the resources from the FMI, from the Institute. I'm actually an approved training provider for this institute, and I'm also on the advisory board as well. But you can go onto the FMI website and download a whole lot of examples and ways that you can content. There's a body of knowledge. There's a lot of information in there that you can use to improve your financial modelling skills. I can see we've got a couple of questions. I might just some basic examples in Excel. Yes, I will do that. Model versus modelling. I'm not quite sure. So Vivek's got a question. Can I request a brief intro to model versus modelling? I'm not quite sure what you mean by that. So modelling is so basically just a verb versus
modelling, as in, it's not about Zoolander, is it, or anything like that?
Yeah, maybe. No, okay. Nothing to do with Zoolander. No. Cool. Okay. So I just wanted to talk now about the skills. So if you want to be a financial modeler, or you want to be able to say that you have financial modeling skills, there's a lot more to it than Excel. I'll take you through a couple of examples in a minute, a little bit more in Excel. But Excel is probably the easiest thing to learn because we're using Excel for our work. We're not necessarily building financial models for our work though. So learning technical Excel skills, you can't be a good financial modeler if you haven't got really good Excel skills. But there's a lot more to financial modeling than just Excel. So you certainly, first of all, you need to learn Excel. You need to have industry knowledge. So you need to know things. There are certain things about your industry. So the non-profit sector is, there are certain things about non-profit that are very different to other things. It's very, there's certain things about the way that the models are built that are different to other industries. So that's certainly something that you need to know about. I was
just going to say, a big test for not-for-profits at the moment, and we've seen the government trying to top up funds. One of the big what-if scenarios will be reduced income or reduced revenue. How do we get around that? And those 8 points you mentioned there are quite significant in making that decision and the what-ifs of that. So I just thought I'd pop in there.
What are the key challenges for nonprofits at the moment, Keegan? So so income's going to be a big one by the sound of it. So you're finding, I think, that the income's going down, and you're having to model that, or to look at.
Well, it is. Plus also traditional two sources of funding. Fundraising is one, and the second one is government grants. Third one is investments, and we've seen how interest rates at the moment, they're flatlined basically. So there's no opportunities to make. So if your fundraising has dropped, your investments have dropped, and you're really relying on government funding, it's going to have a huge impact on the viability of a lot of not-for-profits.
Yeah, that's true. And being able to, and I think keeping an eye on your cash flow is going to be really important. So being able to model that going forward, so to be able to see, that, how your costs, some of your costs might have gone down a little, but probably not as much as the income has gone down. And, at what point are you going to run out of cash, and do you need to plan for that somehow? So a model is certainly going to help you in that case.
Yeah, and a big factor will be with the government, with their JobKeeper and Job Saver kind of packages they've got. Whilst that might help you for 6 months, and it's certainly not going to provide full salary coverage, it'll give you some cash for the employer, the NFP. That's another factor you got to put into your what if, and it's only for 6 months. So anyway, I just thought I'd just
thank you.
In and say
that's helpful. Yeah. Great. So there's certain things about your industry that you would know. And I'm a specialist financial modeler, and I have done some work for nonprofit, but I work for lots of different industries. So I know a little bit about lots of different industries. So as a modeler, I think it's really important for me to make sure that the assumptions and the inputs and the way that I've built the model are correct for that particular industry. And so that's something that that's important to know. Accounting knowledge, you don't have to be an accountant, but it certainly helps. So to know, what does a balance sheet look like? That sort of accounting knowledge is certainly helpful. Business knowledge, things like what are the, knowing the business or the industry that you're working in, or just things like, is it a good investment? Whether looking at valuation, financial sort of fundamental things. The next one is design skills, and that's something. What I mean by design is the layout of the, it's a spreadsheet, so you've got grid lines and it looks pretty boring. But I would say that you should try to make your Excel look attractive, like make it look professional, make it look good. People actually trust your numbers more if you use formatting. So using your company logo. So even if you're just putting together a management report and you just pop your logo in the corner, change your colors, it just makes things look a bit nicer. It's something to do with quite often accountants and financial modelers are not very good at the visuals. And I certainly am not. I've had to think, try to make my models, make sure I put enough time aside to make my models look good. And not only that make them look pretty, but to make them logical so that people can find their way around the models as well. Communication and language skills. Yeah, did you have...
Sorry, if I could just
Yeah.
pop in there. I think that's one of the main things we get criticized as CPAs, is that our general assumption that because we know something and we know spreadsheets, that the people relying on this information, the readers, will likewise have that same skill. And often something like 85% of the people who rely on our information as accountants do not understand spreadsheets or the numbers. So we really got to think of it from the in terms of your design skills. A lot of graphics, a lot of different ways of getting that message across. So it's a very important factor. I've had instances with people who given me massive spreadsheets with, trying to squeeze everything on one big spreadsheet with a font of 6, and trying to read it with magnifying glass, that kind of thing. So it's a huge factor for CPAs, that one, communication.
Yeah.
I'll pop out again.
Yeah. We often find that. I actually did a session for CPA last year, I think, on visualization, like data visualization of taking a financial model and how to present it and make it look good, because it is important. It's something that doesn't necessarily come naturally to a lot of numbers people. And similarly with communication and language skills, often they want to hear from you. If you're the person who's put together the financial model and you need to then present the output, we're not always that good at articulating it. So we have to practice it and think about what's the best way of explaining it, because we often get into all the detail. We're so close to the numbers, and we will explain to somebody what formula we used and that sort of thing, and they don't care about what formula we used, all they care about the numbers and what does it mean. So that's similar with the design. It's something that we need to really pay attention to. Numeracy skills helps if you can add up, definitely. And logic, lastly, making sure that your model is logical, that it actually flows, that people can actually follow the model logically, that it's not just, jumps around and it's all over the place. So those are just a couple of skills that you need. And lastly, I'd like to talk about best practice. So there's a couple of points on best practice I'd like to take you through. We've got a couple of questions. Did you have some questions, Susan?
I did. I was just going to jump in actually before you went into the best practice. Beck was just asking, how do we incorporate risk and or uncertainty about some parameters in our financial models?
Yeah. So how do we incorporate risk? There's a few technical ways of doing that, and it's really to do with probably sensitivity tables is the best way of doing that. So using some data tables, technically in Excel, the best way to do that is using data tables, or doing sort of drop-down scenarios and being able to test. I mean, that's really the purpose of a financial model, is so that you can see if you change one of the inputs, how does that affect the output going forward. Let me just jump back to the question. I think probably the scenarios and sensitivity analysis is the best way to do that, Vivek. Industry, so Sawato wants to know if we can get some industry benchmark data. I'm not sure actually. I don't know the answer to that question. I think it really depends on the industry. Keegan, you might know the answer to that question.
Yeah. Well, I think within a not-for-profit sector, if we're looking at industry benchmarks and comparing one NFP against another, and remembering that NFPs are not just charities, but clubs and associations, membership organisations like CPA. There's lots of different types of NFPs. I know there is industry stats out there, but they've got to be relevant and up to date. So you can't, for instance, compare a charity against a membership organisation, for instance. It's like manufacturing versus, services industry or something. So it's very tricky. I think the Australian Bureau of Statistics has a lot of stats, but that's a paid membership to get that kind of data. But you also got to be careful it's the right data you're comparing yourself to as benchmarks. So you don't want to set yourself up too high a goal to say, we're impossible to ever meet that. So you got to be comparing apples with apples in essence. But I'll have a look at that for, and maybe when we send the link out, see if there is a source for that.
Yeah, that'd be helpful. Yeah, just let me know and I'll
All right.
we can send that out. Great.
Okay.
All right. So yeah, I hope that answered some of your questions. I'll just check in on the chat, make sure there's any other questions. Okay, cool. Let's keep going. So I just wanted to talk about some best practice, in terms of building models, things to watch out for when you're building models. And I'll go through some practical examples here. Number one is documentation of assumptions. That is really important. Consistency of formulas, linking, making sure that you've linked, only entering the data once, not repeating it, putting in error checks, and formatting and labeling. So first one is documentation of assumptions. So it's garbage in, garbage out. I find it really terrifying sometimes when people say, oh, we're going to go ahead with this financial model, this multi-million-dollar project, because the financial model says we're going to get all this income as a result, and think, oh, well, based on what assumptions? So it's really important when you build a model to make it really, really clear what those assumptions are when you've built the model. So there's a couple of ways of building or using assumptions, building assumptions in Excel. So you should be able to see my Excel sheet now. And I've just got a really simple example here of a staff, like let's say you're doing a staff budget, and you've got 15 hours, and I've actually put in a comment here. So that's one way of doing assumptions documentation. Not my favorite way, because you can't see the like when you print it, you can't see it very well. So, but that it is a way of documenting your assumption. Probably a good way of doing documenting assumptions is using data validation. So if it's an assumption that you want the modeler or another user to see, if you click on the cell like that, sorry, that cell, you can see that it pops up with a message. So I quite like that because it's quite discreet. You don't get the little red thing in the corner. There is also some other threaded comments as well, which is something that's new in Excel 365, but it works in a similar way to the comments. This one was actually done using data validation. So let me just go into if you go onto the data tab, okay, go into data validation here, you can actually go in and put the message in like that. So I'll just go back to where I was. I'm just having some trouble with my screen because I can't see my Excel. So that's another way to do it, is using data validation comments. Probably my favorite way though is to do it like this. So using hard-coded text, just literally really, really simple, just type out the assumption. So you want to say rates do not include tax. You want to make sure that somebody who's looking at this model doesn't think that tax is included in these calculations. So you put in there's nothing fancy about that. You just type it out, nobody can miss it. It's right there straight in front of you. So that's a really good way of documenting assumptions in a model. If you want to get a little bit more fancy, you can use, so that's using hard-coded. This one is using the ampersand. It's actually linking it. So I've actually used inverted commas for text, and then I've linked through using an ampersand for cell C2. So now when I change that to 16 hours, everything changes and the assumptions will change as well. So that's not a bad way of doing it also. I'll send a copy of this so you can have a look at that. So I quite like doing that a lot, because if you ever type out assumptions, sure as egg, somebody's going to change one of the inputs and then your assumptions are going to be wrong. So certainly that's not a bad way of doing assumptions documentation. And the other thing I wanted to mention is linking. So making sure that you link from there. So I'll go, sorry, just going back to, you should go back to the PowerPoint. You should be able to see my PowerPoint now. So that's assumptions. So that's the first thing when you're building a model, to make sure that you document your assumptions really, really clearly. The second thing I wanted to mention was modeling with consistent formulas. So this is something that's Excel 101, but where you actually use your dollar signs. So I don't know if you guys, if you've used Excel, which I imagine you do, but actually anchoring your referencing. So I'll just take you through an exercise of how to do this. So let's say, for example, I've just jumped back into Excel here. Let's say, for example, here, if you wanted to calculate your investment here, if you say A2 multiplied by that one there, and then you wouldn't want to be going like that and having to go through each one. It's going to take forever. So a much better practice way of doing it is to use your shortcut. So you say A2, and then we use our F4 shortcut, and we anchor. So you put the dollar sign in front of the A, we multiply it by 7.5%, and then I put the dollar sign in front of the 1, and then when I copy it across and down, yeah, you can see that it's going to pick up the correct one. And that's a really important point for financial modeling best practice. So whenever you have a block of data, it's a really simple example here, but wherever you have a block of data, make sure that that you have consistent formulas. If you're using Excel 365, there is now dynamic arrays, which gets away from this problem, but most of the time we're using this sort of thing where you've got, make sure you put the dollar signs in front of your referencing, because that's going to reduce the number of unique formulas in your model, and it's going to reduce the errors in your model as well. So that, I'll just jump back into PowerPoint. So modeling, so that's the second point of best practice, is having consistency of formulas all the way across and down wherever possible. And to do that, you need to use your dollar signs. The next one is using links. So always linking as much as possible, because, and this stuff is really basic, like it's Excel, it's financial modeling for dummies. This one, just come over here, financial modeling for dummies. It's Excel 101. But I often find that even people accountants who've been using Excel for years and years and years, don't think to do it like this, because it's just financial modeling stuff that's so simple and can make your life a lot easier and someone else using your model a lot easier as well. So making sure that you always link. There's nothing worse than picking up somebody else's model and then trying to work out how they came up with a calculation, and you trace it back and you trace it back and you trace it back, and it's a hard-coded number. Like, where did that number come from? You know, there's no sort of documentation, or even worse than that, you can't trace it back because it's hard-coded. So just make sure that it's always linked, and that wherever you get to the inputs that you document where that came from. Not a bad idea to use an input style or a blue font as well to show what's an input and what's an output. So I'll show you an example here, just going back to that file there. Just coming back to this one here where you show the links. So that's an input. So you should be able to see my Excel file there. That's an input and that's an output. So you can see how that's been calculated. But this one here, you say, well, where the heck did that one come from? You want to be able to trace it back. So if I use my shortcut, which is control back square bracket, which is sorry, not that one, this one, the back square bracket. So if I use control, I mean, you could use trace precedence, but I might prefer using shortcuts. Control back square bracket, that will jump back to the source, so you can see exactly where it came from. So always linking through wherever you can. Just always linking is going to make things a lot easier in your model. So particularly with a cash flow. So for example, this is an example where if you were doing a cash flow forecast, you would have your opening balance, and then whatever happened in the month links down to your closing balance, and then that closing balance links up to the opening balance for the next month, and then that forecasts out to your closing balance. So you have your opening and your closing, and then your opening and your closing. And if you don't link it like that, then your cash flow won't work properly. You're going to have to manually update it every single time, and you don't want that to happen. So using links is a really important point of best practice. I'll just jump in and see if there's any questions while I...
There is, Danielle. Vivek just said, are the different colours, which look beautiful by the way, on your worksheets done by conditional formatting or through some template?
just formatting, not conditional formatting. That's too much work. But yeah, it's just using, I've used styles. So I'll just go back to my Excel here. And on the home tab, you can see here the cell styles. So formatting can be really time consuming. So I usually set up some styles in advance. You can actually match them to your logo, and then you can set up styles. This is an input style here, so that I've actually changed it slightly. And so that way it just makes it really simple to do your formatting. Just saves you a lot of time. So any other questions? Yeah, I can see there's a question from Praveen. Is there a possibility to purchase an ebook on financial modelling for dummies? Yes. I'm so glad you asked that question. Yeah, you get a copy of the book on my online courses. It includes the copies of the books, but you can buy it from Amazon. You can buy it as a hard copy, or you can buy it as an ebook as well, or Kindle or whatever. Yeah, so going on to the next one, if you have used links and best practice, you would never need to enter the same value twice. You should only ever enter it once, and you would never hard code numbers into a formula. So for example, in that case, you would never type in 136,800. You would link that to a separate cell and then have the hard code in there. You would never hard code into a formula. Your formula should always link to cells, which will then change. And that's really the whole point of financial model. Or financial modeling in the first place, is that you want to be able to change the inputs and the outputs change. So if you don't do that, if you don't link to hard-coded numbers, I venture to say it's not a financial model. So it's really important that you link right throughout, and do try to avoid daisy chaining or spaghetti links, where you link to a link that links to a link that links to a link, and you just end up with this absolute mess of links. Always link to the source. So you have, like, for example, interest rates. You have one single cell for interest rates right throughout the model. Every time you refer to interest rates, you link back to the original cell. So that's an important point for financial modeling best practice. And error checks, making sure that you always put in error checks, any sort of possible, you know, whenever you know that this calculation over here should be equal to that calculation over there, you would always put in some kind of an error check. I'll show you an example of that. I'll just jump back to this file here. And here is an example of a budget. So we take a budget and we want to convert these numbers here, and we want to spread it out over 12 months. We want to take our budget and then turn it into a CapEx schedule over 12 months. And where we've done that is just using a simple formula. Again, using best practice, one single formula all the way across and all the way down. And you can see here that I've used an if statement, and somebody has come in, and somewhere there's an error, I think, I'm not quite sure where. Somebody's put in the wrong cell. And so you can see there that the total here does not equal the total over to the right. And that's because somebody's put in the wrong date. Let me see if I can see what the problem was. It looks like it is, yeah, it's that one there. You can see that that one's missing. And the problem is that, yeah, okay. So that's actually really, really simple error check. So we just say, if one cell does not equal the other cell, give me the word error. Sometimes you can get a false error using it like that. You could do it that way, or you could just say equals this cell here minus this cell over here. That's another way to do it. So a few ways of doing error checks in there. I've done some conditional formatting on that one. So I've just said, I've put in a rule and I've said, if the cell equals to the word error, turn the whole thing red. So I do recommend using error checks wherever possible. Often an error check is not necessarily going to help the modeler, but they'll certainly help the user. So when someone's using your model later on and they make a mistake, the error check will flip up and make them realize that they've entered the wrong thing or the wrong date or something like that.
Danielle?
question?
Yes, we do. We've got a couple. So Vivek's asked, named ranges are absolutely addresses, but in financial models, we need mixed addresses at times. So do we need to be careful using named ranges?
Yeah. So, yeah, named ranges are where you, generally a named range just refers to a single cell or a single range of cells. And so when you copy it across, the reference doesn't change. So I don't recommend using named ranges if you want it to copy across. We use named ranges for single input. So like if you have like interest rate, like one single input, and then you use that in the calculation. So I wouldn't recommend a named range in that case. Was there another question as well?
Yes, Sandeep's just asked, can you please show your conditional formatting formula? Sorry, that's all short.
It wasn't actually a formula. I just went into highlight cells rules, and then I just said if it's equal to the word error, then make it, that's it. So it's very, very simple. So
great, thank you.
okay. I think that was all for now. Cool. All right. And lastly, the last point of best practice that I'd like to cover with you is formatting. So one of the most common mistakes in financial modeling, and I mean, if you're not terrified of making a mistake in your financial model, you should be. It's the number one thing that we worry about is having a mistake in the model. So that will get hopefully picked up by the error checks, but ways to reduce possibilities for error is one of the common mistakes is mixing up units. So mixing oranges and apples, it's a really common source of error. So make sure that you format and you label. I was building a model yesterday where we were having the units change depending on currency. So we had a row that was just for units. Sometimes we do a column that's just for units. So you can see, is it a percentage? Are we talking about pounds? Are we talking about Australian dollars, US dollars? Any sort of change in currency or percentages, or is it in millions or is it in thousands, that sort of thing. Just be really, really careful about your formatting and your labeling. So how are we going? We've got a question from Abhinav. Is it possible to show an example of a pivot chart? No, we're not going to do pivot charts in this case. We don't use pivot tables very much in financial modeling. Pivot tables are more for when you're dealing with large quantities of data and then you run a chart off that and it becomes a pivot chart. We're not going to cover pivot charts today. There was a couple of questions when people registered for this. There was a few questions that came through, Keegan, so I'm going to just answer those questions, and while I'm doing that, we'll see if there's any other questions that that we wanted to answer. Did you want to make
okay? Yeah, that was great. Thanks a lot, Danielle. I think, you know, if there's any more questions, certainly please bring them up now, or if you think of something later on after we've finished, just pop those questions to us. Certainly, I think financial modeling, as I said in my earlier introduction, it's a skill that we kind of ignore. We sort of think we know what we're doing, we know how to do it. But I think when things are in businesses are steady and not very dynamic, it's just business as usual. We don't do a lot of modeling. We just add the CPI and next year, and away we go, and things don't change very much at all. But we're right in a very volatile environment, the economy, everything else. So I think whether we like it or not, we're going to have to pick up this skill, and no one's expecting you to get to that advanced level at this stage. But we got to think about the answers and reports we provide to our managers, bosses, or whatever, or clients. So I think it is a skill based, and certainly talking to recruiters and seen a lot of ads myself, and I've helped friends out. It is a very necessary skill for all accountants, whether we like it or not. So so thanks a lot, Danielle. At this stage, anything else? Any other questions?
Yeah,
or
I was just going
anything I might have missed?
I was just going to address these couple of questions that came through in advance.
Sure, yeah, please do so.
Yeah, there was just a question that came through from David, I think it was, autonomous dashboards for reporting financial performance. So using infographics, and I think this kind of goes back to Keegan's point earlier about visualizations, because we often find as as finance people, we just show the numbers because we've spent so much time calculating the numbers. We don't always think about how it should look. So I just wanted to show an example. I've just popped up. This comes from my dashboards. I do a dashboards course, and here's an example of, perhaps as accountants or modelers, you've done all your calculations and you show something like this, and you wonder why nobody's interested. So I definitely would never recommend that you present numbers like that. An example perhaps of doing that would be to do something visually. I quite like waterfall charts as a way of presenting financial information like this. So if you were to say, here's our total revenue, and you can see, I've even put the number at the top. It's a bit of duplication there because you can see the number at the top of the column, and it's also shown on the label. But it's quite nice to be able to look at it visually, and you can see there that the inventory direct costs are the sales, and then from that is gross income. So it's just a more visual way of showing the information. And then out of gross income, we then need to pay our staff costs, marketing, facilities, which gives us a small amount of operating, and then we have to take off our taxes, and that gives us our net income. So that's an example of perhaps how you could show something visually rather than just showing the numbers. Yeah, and then the other question was the best way of putting budgets together using past year and current year. Should be an example of past performance, but you never know what surprises are in store. Absolutely, that is so true. It's a really good question. Often, I mean, putting together budgets, when we're talking about financial modelling here, but often building a budget, you're building a financial model for the purpose of putting together your budget. So it still is a financial model. And in the old days, we used to be able to just look at last year and then just add CPI and then just roll it forward. And at the moment, that's probably not really practical. I actually did a couple of short videos on YouTube the other day about zero-based budgeting and flex budgeting, because I think those are two really old concepts that I think are really useful for budgeting. So, rather than looking at past performance using zero-based budgeting, so actually it's a lot more work, but having to actually look at each line item individually, or alternatively using flex budgeting, perhaps where you're looking at volume-based pricing. So it's basically a lot more work putting together a budget. If you have tools that will do it for you, great. Often we just end up doing it in Excel. So I think that question was from Ben. So I hope that's answered your question, Ben. Do we have any other questions, Keegan or Susan?
Anyone else? Any more questions?
Yeah.
I think we've
Vivek's
pretty well covered that.
Mentioned the horror stories. So there's lots of horror stories and errors. Why do we make such errors? Because we're human and we use Excel. That's a problem with using Excel. Sandeep wants to know about using trending and forecast. We used to, I mean, there is a regression, you can use regression analysis for, there's an Excel formula for forecast that will look at past trends, and then you use that for forecasting out into the future. Probably not going to work in the current environment.
No.
Caitlin wants to know, how do you suggest developing assumptions? That's the thing I find actually quite hard, because as a modeler, I don't really know the business that well. So I'll sort of look at what happened last time and then put it in as an input, and then that can be changed going forward. I mean, you want to make it so that it's a variable and it can be changed. Yeah. Do you have any comments on that, Keegan?
I think I think as you said on one of your bullet points, business knowledge is incredibly important. Rather than you making the assumptions, thinking you know where the organisation is at, it may require a lot of discussions with the management, the executive, in terms of their strategic plan, the disruption, maybe restructuring the organisation or whatever it might be. But it'll involve a lot of engaging with people and getting a lot of input, even if it's very broad sort of input. Like if they say we're looking at cutting costs by 10%, just some general information like that, then you can base your scenarios on, what that 10% might look like, or in what departments or what areas. So I think feedback, a lot of discussions, a lot of meetings certainly the accountant just can't sit there on his or her own and conjure up assumptions.
No,
You know,
good
yeah.
point.
So I think a lot of
Very
engagement.
a collaborative thing,
It
isn't
is
it, coming up with assumptions. Yeah.
Yeah. So we got to get out there and talk to people. Yeah.
Yes, definitely. Yeah. Okay, we have a question from Leanne. How to attend the modelling training? I have a website, plumsolutions.com.au, where you can see the training that I've got happening there. Was there any other questions, Susan?
Thank you. I was actually just popping on to mention that Leanne had a question. There were a couple of others. I don't know if you saw those two. One from Caitlin, how do you suggest developing assumptions?
Yes, we addressed that one.
Fabulous. Fabulous. Thank you.
Yeah.
That was it for now.
Okay, fantastic. Feel free to drop me a line if you think of any other questions. Thank you so much for hosting me today, Keegan. I very much enjoyed it. I'll leave it to you to make any closing remarks.
Okay, thank you very much, Danielle. I think I've certainly learned a lot. I'm a bit old school when it comes to, I certainly don't have the skill base of, Excel spreadsheeting skills. I'm, basic kind of a functional person. And it's always been tricky for me to make assumptions, in that sense. And I do it in a very complicated way. So I think learning the tips you've given us, and even thinking about doing the course, the one you mentioned that's, coming up in October. Certainly,
Yeah,
I think it's been very worthwhile. Thank you very much for taking us through today. I will be sending the link out, which, to the YouTube, presentation. And if there's anything else, please, if you get questions, I get questions, I'll certainly share it with you. So no, thank you very much to you and Susan for helping out. So.
Okay, thanks for having me, Keegan. See you later.
Thank you.
Bye.
All right. Bye-bye.